All right, welcome everyone. Welcome. We're starting a little bit early today, but I want to go over some very important points. So I have 3 objectives tonight. All right, so I'm gonna go over them swiftly. So make sure you guys listen and make sure you guys watch the recording as well. If you guys want a quick review again of what I'm about to tell you guys. And so with that, let's begin. So first of all, we called out the bottom perfectly on SPY. Right, so if you guys watched that live stream on, I believe I have provided that link down below in the description box. So make sure you guys check out that live. So right after Amazon's earnings on October 27th, we had that great bounce. Okay, so this right here, this arrow is indicating this current pivot that we have from the lows, and I have clearly told my members that we have this demand area sitting at 409 to 415, or if you guys want to be a bit more specific, 408.50 to 414.50. Okay, obviously that doesn't really matter. It's only a 50-cent difference, but if you guys want to be picky, you guys can. That's all I'm saying. So now with SPY and the overall markets, we're able to patiently wade through and grab some SPY longs and UPRO longs, and we're able to hold through and reap the rewards because we're now back over this 430 level. This is a major resistance level that was also a major level of resistance back in when we made that nice gap up in June, early June, and we made this nice micro momentum bull flag before we saw that nice run up to the upside, and that's also what led into the summer rally. So with SPY acting like this, okay, so for the past 4 trading days, so essentially this entire week has been a blessing here, and the relative strength in the overall markets are back. The RSI below is telling us that we had a value of 54.70 to close out today, and the markets have ended up 1.29%. Okay, so that's very good. And the fact that we've held this gap up overnight as well is a great sign. Now, on to my second objective here. Let's talk about Apple's earnings. So Apple has a huge weight in the S&P 500, right? So I think currently has about 7%, 7.10% precisely, if I remember. Okay, so with Apple's earnings today, things don't look too good. However, I believe Apple's earnings catalyst can provide us with the much needed pullback. That's right. So we do need a pullback now because at some point this rally has become a bit unhealthy to the upside. So in order for us to have a sustained move to the upside, we need to make sure that we are doing it in a very structural way and we're not just going up and going up and going up and going up every single day. Now, obviously that's ideal, but if you want to have a sustained rally, right, it's essential that we see some sort of pullback. And I believe Apple's earnings and obviously the earnings reaction will provide us with that nice pullback. So Apple today after hours, they ended up closing at 171.57, right? So, it's a significant move down. It's not too much, okay? It's around 3.50% almost of a move down after hours from the closing price of today. So I think again, it's just for me to use Apple's earnings catalyst as a way to explain a potential pullback tomorrow, right? So Friday can be a slightly green day, or possibly it might just be a nice little doji, right? Who knows? Okay, so all I'm asking for the markets to do tomorrow is a slight pullback. All right, I'm not looking for a huge gap down or a very large bearish candlestick tomorrow. But I do also know that there's going to be a lot of 0 DTE traders who are wanting to short the market tomorrow at market open. So it's going to be pretty interesting to see because at the very least, all right, technical wise, SPY has now retested and reclaimed this ascending macro support trend line that we've been following since October's low. All right, so we revisited this October's low trend line back in March, and now we revisited again for this year's October's low. So I told my members this as well, that this current, well, in the past now, but well, 2 days ago or 3 days ago, that this move down in October, it just feels like last year's move down, right, during October, when everyone was calling for more than a 20% market crash. And again, this was just a pretty textbook correction, slightly over negative 10% from 2023 highs at 459.44. So let me just give you guys a visualization here. My God, I can't speak today. My teeth are slightly hurting today, so my apologies, guys. So as you guys can clearly see here by my ruler that I've just traced from the top to the bottom, it was around a negative 10.83% a pullback or a correction. So it's a very textbook correction. And so, it was very, it was anticipated that we get a nice pivot from this demand area, plus the seasonality trend that I've been talking about since July, right? So if you guys remember back in, when quarter three started and we started that pullback in August, I told you guys that, from this point forward, I'm going to expect an official pivot from the transition from October to November. I know you guys clearly remember that because I've been saying it multiple times. So, it's very important to note that this pre-election year has been following the seasonality trend, the average trend, to a T, literally to a T, right? And the only reason why I got stopped out on my second UPRO position when I was trying to long the overall markets using that ticker was that I assumed that we might not be following the trend a little bit towards the year end, which is the reason why I grabbed that second position for UPRO. And eventually I got stopped out and I had to go back and revert back to what I said initially about an official pivot from the transition of October to November, right? So, at this point now, I don't need to explain myself because that initial analysis has worked out perfectly. From October 27th to October 30th, we got that transition and we got that nice, huge, large jump up higher and bounce higher when we hit November 1st, right? And including today. So, this is really just following in line with the seasonality trends. It was my personal error to try to kind of move away from it slightly and try to figure out where the market could potentially go rather than following exactly what the seasonality trends have been telling us, because again, this pre-election year has been following the seasonality trends to a T, nearly 100%. So, even with this current action, it's telling us that yes, the market wants to follow the seasonal trends, and based on that, okay, we can be seeing an end of the year rally. This is a great start for an end of the year rally. And I love the fact that the average volume is still rising as we're bouncing, right? So obviously most of the volume injection came in the last half of October as you saw it move down, and eventually we lost this daily 200 SMA. But if you guys watched my most recent videos, I said that we're going to be seeing a very quick snapback to the daily 200 SMA, right? So that's exactly what we got as well. And this is the type of reaction that you see when you see the late reaction coming in from the lagging SMAs too, right? Because again, I've always told you guys this, right? My SMAs are great to use, right, for resistance and support areas, but they are also still a lagging indicator, right? And that's the reason why I don't tend to rely on them 100% of the time, but I use them as an indication of where price could possibly go, which is the reason why I was able to deduce that the price, once it broke below the daily 200 SMA and we continued to push lower without much of a broader market sell-off, where the individual names were not really participating with the overall markets, right? So the overall sector and individual participation from this end of the October month sell-off, we didn't really see much of that happening, and we actually saw market breadth holding, right? The market internals were actually holding when we saw this large move down, right? So, obviously the market breadth has expanded, and we saw this nice push upward the first week of November and into the last 2 days of October as well. So, this is something that is very, very good to be in the position to be long in the markets. I'm glad that for me personally, and for my members who got into the SPY longs and UPRO longs, have been patient, and we got this nice pivot higher. It just feels like the first week of October when we nailed that large move higher as well, this nice reversal. So again, Apple ER tomorrow. Okay, now I'm gonna go back to what I was saying. I'm gonna expect a nice pullback tomorrow to at least around 426, and possibly if we do see a gap fill, I want us to at least fill in the gap and stay above the daily 200 SMA from this point forward. Because from now on, what I'm going to expect the 10 SMA to do after it breached below the daily 200 SMA again, this was a late and lagging reaction to this move to the downside, and now this move to the upside. I'm going to expect it to continue to curve up higher, eventually break back over the daily 200 SMA and begin to support the price higher. And once this happens, or actually when this is actually happening, and we're waiting for the daily 10 SMA to curl up higher and eventually retest the daily 200 SMA and then cross over the daily 200 SMA, I'm going to expect the price to be sitting over the daily 200 SMA and, most importantly, consolidating. Okay, we need to consolidate this move. So at the very least, I need 2 to 3 days of consolidation. So something like what we saw back in June, right? Early June, when we saw this nice gap up, and then we saw this nice consolidation. Okay? So hopefully you guys understand that and understood that. And hopefully you guys can definitely use this in a very, very good way for you guys to be able to profit into some new trades, or maybe you guys might want to wait until you guys add in new long positions in the market, or you guys might want to be rolling up into new positions for a long position. But again, my stance is still the same since what I described in July, right? And obviously into August, that the markets are going to be looking for an end of the year rally. I still believe that. And this current reaction from the transition from October to November is a clear indication that we're looking for an end of the year rally, right? So again, it's pretty simple. I'm not trying to be too complicated with my analysis, my bigger picture analysis. And that's exactly what I tried to paint for my members this week on Sunday night. And hopefully they got the message, because it was good to be holding the bigger picture, because it paid off. All right, it paid off. So again, I'm gonna continue to have that bigger picture and continue to hold my long positions and potentially take some profits tomorrow to be able to add into or roll up into a new long position. I'll let you guys know by next Tuesday. So again, with SPY, at the very least, I want us to hold over the daily 200 SMA, whether or not we decide to fill in this gap. Because again, we might not fill in this gap like we did back in the first week of June, right? We didn't fill in the gap until October, right? Months down the line. And that could still be the same case. We can continue to rise up higher and higher and higher, possibly hit 437 again, and ultimately end up hitting this descending resistance level, which I now have to extend so that, if we do see a break over 437 finally, since we didn't end up doing that back in mid-October, we can see that retest and see that end of the year rally into my SPY targets for the end of the year at 450 to 455. All right, so I have somewhat of a conservative outlook for the end of the year rally. I'm going to expect SPY to be hitting around 450 to 455. I'm not expecting another yearly high to be made. So again, I'm not expecting the markets to break over, 459.44. All right, does that make sense, guys? Right? So again, for SPY, I'm really hoping that we see some sort of a pullback, an orderly pullback tomorrow, because again, we are getting a bit extended, especially on the hourly time frames. Right, especially on the hourly time frame. So even the RSI is becoming slightly over bought here on the 2 hour. So we need to be cautious here. But again, I'm not going to expect another large move down that we saw in October. I truly believe that we have a nice pivot so far in our hands, an official bottom for this entire run down, or this entire correction since August. So I'm going to keep that perspective, that bigger picture in mind from this point forward. So again, unless I'm proven wrong, I'm going to keep this analysis intact. Okay, and I'm going to follow through with this and continue to play my trades and execute on my trades using this analysis, this bigger picture analysis. Right? Now, lastly, let me go over some trades that the members and I have made. So one was CCJ. Very, very good swing trade, very good momentum trade that we got yesterday. And we had a very nice dip buy, and we had a nice run up to the upside. I believe this position hit 80%. I got a little bit early, and again, I had to manage my SPY and my UPR longs. I had to take some profits because again, I had a pretty heavy position. I had a full position, and again, full position can mean different things for different people. And again, that's different for me too. So the profits, I had to take some profits on my longs. So again, I had to do what I need to do. Again, it was a very, very good a trade. I can't complain about taking profits. If you're complaining about taking profits, then you might be in the wrong profession, because if you're complaining about profits and if you're complaining about losses as well, if you can't be happy about any of those two things, you might want to choose something else. Right? So yes, of course I feel FOMO. Who wouldn't feel FOMO? Right? But again, profit is profit. Early profits is still considered profit. And if you can't accept that, well, you're gonna need to do a little bit of soul searching. Right? So CCJ was a great swing trade. AI was a great day trade for me. So I actually got out with profits today of over 40%. This one saw a great entry point at 26. It was a great entry right over as we're breaking over 26, and I got out with a great 40% return on this name, right? So, those are some of the trades that we've been taking, and obviously, I've already explained to you guys EPRO and SPY. Right, these are some great trades that we've had so far. Still holding them, except for AI that I got out and CCJ that I got out as well with early profits. But overall, that is it for tonight, guys. I want to do a very quick live stream. I went over 3 objectives. All right, if you guys are just joining in, make sure you guys watch the recording as always, and make sure you guys leave a thumbs up down below if this live stream is helpful or the recording was helpful. And if you guys are having some of your own opinions on what the market can do, please leave a comment down below, because I always read everyone's comments. All right, I love hearing you guys' thoughts and what you guys think against my analysis. If you guys have a different opinion, please let me know. I always read those comments and enjoy reading them as well. But overall, the seasonality trends, again, are intact. We're still expecting an end of the year rally. This is a great start for that end of the year rally. We still have about 2 months left. And so, hopefully you guys are, closely watching what I'm saying, closely watching my analysis, and most importantly, apply the analysis that I give you guys. All right. Good luck, and I'll see you guys next Tuesday at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Have a great rest of your night, and thank you guys for watching.